Welcome to the MHP Exchange podcast, where industry veterans Frank Rizzo and Eric Busadil generously share their wealth of knowledge in their new podcast dedicated to the manufactured housing space. They tackle tough questions to provide valuable insights for those considering investments in mobile home parks. If you're seeking answers in the manufactured housing space, this podcast is your go-to resource.
And we're back on the MHP Exchange podcast. I'm your host, Frank Rizzo, and we're doing something a little different today. Eric is not joining us, but we are going to run the MHP Exchange podcast, and we have a very special guest, someone who I'm really excited to talk to because he's really making a move, not just in the MHP space, but in real estate in general. And I think he's got a great story to share. And if you're interested in learning about real estate, how you're getting started, this is a show and a program that you're going to want to listen to. So we're going to welcome Garrett Terrell from the Rocket Capital Fund on the program today. Garrett, based in Phoenix, Arizona, he runs a fund that has done everything from flips to multifamily to mobile home parks. And here's the interesting thing, being a fund manager and an operator, I mean, Garrett is 29 years old, right? So he is one of these new breed of real estate investors, and he's here and he's going to share a little bit about what he's done, because you could see it, you'll see in a short time, he's done quite a bit, right? Pretty impressive resume. And I want to welcome Garrett Terrell to the program. How are you today, Garrett?
Thank you, Frank, so much for having me on. I'm doing great and glad to be here and glad to have this conversation.
I'm glad you're here as well. And I'm gonna come in hot on this, right?
Yep.
So you're 29 years old, right? And I'm sure you're raising capital to do these deals, right? Yep. Why would someone like myself want to invest with you, right? What kind of experience, knowledge, or opportunity can you bring to the table, being that you're 29 years old?
Yeah, it's a very valid question. I think the first thing, the most obvious answer is my track record. So a little bit about my story. I had a really good track record of single family fix and flips in Washington State before we moved to Arizona. And I had a track record of raising money and doing well in that first. That was kind of like my base and my foundation. Then when I went into the MHP space about 9 months ago, 10 months ago is when I bought my first deal. I didn't raise any money for that. I used all of my own money just for that one specific deal. And we'll talk about it here in a sec. It's in Alabama. It's a fantastic deal. Love that deal. But I used all my own money, and basically I wanted to prove the concept first and then raise outside money after I did a deal with my own money first. So that's basically, I don't have a track record of doing 50, 60, 70 mobile home parks, but in my first 9 months, I did a full cycle deal, all with my own capital. And so I'm pretty proud of that. And so right now, I mean, just from that one deal, basically, I have roughly about 40 different investors that are on my list that have reached out to me, that I've had individual conversations with. So I've kind of leveraged that one deal that I really hit a home run on to build a good private capital list.
That's great. And, I asked those questions, Garrett, because and we were talking a little bit beforehand. It wasn't that long ago that I knew I was out there raising capital for the first time, not having the track record, not having the experience, and going to people saying, but I have the opportunity, I have the deal. So that first capital raise, even though it was on a single family, and I started out the same way, right? Like, what was that conversation like? How do you, what kind of deal did you find? Like, how did you find it? How did you underwrite it? And then who were you able to bring in that was willing to back you?
Yeah. So at first, it was, I did my first couple of single family flips with my own money as well, okay. And so I felt very comfortable raising money at that point. I didn't buy my first deal with somebody else's money. Okay. You know what I mean? So I had some level of comfortability with that. So I could speak with conviction to them saying, look, this is a great deal. We're going to make money on it. We need $35K for the rehab, I'll fund the hard money and everything. And then we'll split it at the end. That's kind of how it, started. And, really from the start, I mean, I did single family fix and flips for almost 5 years. I got licensed in 2018, and really we were doing single family fix and flips up until February, March of last year. And so I did a lot. We did a lot of transactions. I was on the broker side in Washington. So I was busy doing fix and flips and little single family duplex rentals, stuff like that. And on the broker side, so I had some good money coming in, but it still wasn't fulfilling. And so that's when I kind of went into the MHP space and was looking for something a little bit more.
And again, this is I obviously had my real estate license and my brokerage license, and it was a great access point. And I always knew getting into while I was in the real estate business, I wasn't in the transaction business. Like my focus was always on niche investments, finding opportunities. Sounds like you were very much the same. And having that license gives you the opportunity to really do a deep dive. Like you can focus your time, energy, attention. You meet a lot of people. You meet investors. Is that where your first pool of investors came from?
That's exactly it. Yeah, I worked with this investment group out of Seattle and helped them buy a bunch of duplexes and single family rentals. And I just got so familiar with, and I was brand spanking new too. I was 22 years old, and I'm actually 28 right now. I turned 29 next month, but I was 22 years old, green as can be. And I was just excited to be there and happy to help these guys. Like I was Johnny on the spot with everything. And I just learned the lingo, and I saw them making great money on all of these deals. And so that was like my first year in the business. And I was like, man, I should probably focus on investing because these guys are crushing it. And, I'm just focused on commission checks right now. So that was kind of a little mindset shift for me. But yeah, being in the space definitely gives you an advantage if you have a license. If I had to go back and do it all over again, I would say I would probably focus on wholesale from the start and not have a license, just because I think wholesale gives you a better skill set on the actual investing side. A license is more of just like a sales job. You know what I mean? It didn't really give me an advantage going into the investing space or, build that foundation. You know what I mean?
I do. I think you can get, and I've seen this happen because I used to instruct, and I was a trainer and a teacher for people getting their license. And I would see people go through the school, and by far and large, 50% of the class would say, I want to invest. And then you would see them years later and they get caught up in the transaction, which is the cash flow. So you have to stay disciplined to the reason of why you get into the space in the first place. But you said a couple of things there that I thought were so key. And if you're listening and you're starting out, I picked up, you learned the lingo. So you were willing to go in there and be a sponge. Like you teamed up with people who you wanted to be like, and you listened to what they were saying. And I think this gets lost on a lot of people. And I'm not saying a generation, I'm just saying a lot of people that you speak to. You were willing to do more than you were getting out because you realized you were learning along the way, right? So you were putting in more than maybe what the check was, where I think right now a lot of people are like, well, if I'm doing this, what am I getting out of it? And it sounded to me like you were willing to put in more because you wanted to get that knowledge, which you knew was going to pay off for you down the road.
100%. Yeah, it's exactly like the book, The Go-Giver. If you haven't read that book, fantastic book. I'm reading it right now. When I was brand new into the agency business, I gave more in value than I received in payment. And it didn't make sense at first, but it makes sense years later, And so, yeah, huge proponent of that.
That's great, because you got to remember, in this business or in this space, just investing space, you're not hunters, right? We're not hunters. We're farmers, right? Farmers plant seeds and they wait for it to grow. And it seems like you did exactly that. So kudos to you.
Thank you.
Then you pivoted, right? And you made this pivot and you decided to and you could have done it, you could have went commercial, you could have went office, you could have went multifamily, you could have done retail strip mall. But you said that you were fascinated with the MHP space and you decided to go into MHP. What drove you to MHP at that point? Like what is the attraction for you to be into this space?
Well, so it first started out with one of my good friends and business partner, Ethan, started buying mobile home parks in Texas like 5 years ago. And so we had done a bunch of stuff in Washington. He had helped me with PPC, and he had told me about mobile home parks way back then. And I was like, what? Like mobile home parks? Who would want to buy that? Like you're talking like the trailer trash, and I just wasn't open to the idea. I just had my own personal thoughts and opinions and ideas about it. And really, the more that I kind of got older and looked more at the asset class, and I was like, looking at some statistics and data that how it's the lowest defaulting asset class out of all commercial real estate. It's also a limited supply that is not being rebuilt. So there is some inherent value to that just in general. And the operations of it is fairly simple, if you have systems in place, and I just like it. I don't know what it is. I think everybody has their own asset class. Some people are self-storage guys. Some people are Airbnb, luxury Airbnb guys. I just so happen to be a mobile home park guy. I don't know. It just makes sense in my brain. Obviously I love the returns. I think that's a huge benefit of being in the space, is getting to reap the rewards. But I just love the asset class. I just feel very comfortable with it. Very comfortable being on site, and I love it.
It's a different asset class, and
yes,
you get into this space. I find people that either love it or they hate it. And there's really no in between. You can't kind of be a mobile home park operator. It doesn't work that way. You have to be focused and intentional on that. So you get into the space, you buy your first park. How do you handle the management of it? Right? Are you vertically integrated? Do you self-manage it? Have you hired a management company? Like, what is it that you do for the day-to-day operations?
Yeah. So for the management of my first park, I built a really good relationship with my seller that I bought the deal from. She was a lady in Alabama. She was retiring. She was getting to the end of her career, and I was really and I bought it with hard money, which was very risky, but it worked out because I knew it was a great deal, and we'll talk about that in a sec. But built a really good relationship with her, and and so she still wanted some kind of money after the transaction, and so we worked out a little agreement for a couple of her employees and her, because she lives a couple minutes down the road, to actually stay on site and manage it for me. So it's technically in-house, but it's more of like a 1099 situation, and it's been running great for the last 10 months. It's been fantastic. We've done some value add. We've done rent increases. It's been great. So yeah, very blessed.
The interesting component of that, and again, I've had the ability of being involved in other asset classes. You don't typically find, when you sell a multifamily building, the owner doesn't want anything to do with it, right? The owner doesn't. But many times we've come across exactly what you're talking about. The owner realizes they don't want the ownership headache, but they are vested in the community and want to see that vision take shape. And maybe it's either lack of capital or lack of, business planning, for whatever the case is, but they will stay on board and they become maybe your best asset. And in many cases, we've had the former ownership stay on with us in a managerial role, and now they've been able to see maybe their business plan take shape because we've been able to accelerate the growth of what they wanted to do, and maybe they just didn't have the capability of getting it done, whether it was they needed a capital infusion or they just needed a bigger team in place to supercharge that. So you picked that up right away, which is fantastic. So
that is so true. 100% true, because the exact phone call that I had with her before we closed, because we were talking about the management, was she goes, she was like, Garrett, this is like this mobile home park, and it's 5 minutes from downtown Montgomery, Alabama. She goes, I'm known in the community. This is like my reputation. This mobile home park is my reputation. She goes, I'm going to help you stay on and manage this thing, and I'm going to make you successful with this because it's my reputation on the line. And I'm like, okay, we're going to be best friends, because I totally agree with that. And I appreciate that she has so much pride of ownership in that too. It just really shows how much she cared about it. And I was providing a great value and service by, giving her $1 million hard money loan or payout. And she paid off all of her
that you were paying for.
That I was paying for. Yeah.
That you were paying for.
And she, she paid off all of her debt. She's completely debt free and had a bunch of money in the bank. And so she was more than happy to help manage it and help me make even more money than she was making with the park. And so it was just such a great win-win scenario. And you're right. She right now with the management, she's my biggest asset in the business for that park. I mean, it's pretty amazing.
You're actually making it sound a little bit too easy. So I got to believe that from somewhere along that deal, you got a punch in the face that you weren't expecting, or a kick in the gut that you weren't anticipating. So what was the biggest, because it's a change. I mean, you go from residential single family homes and flipping them. I mean, you have a budget, you have the people that you're either working with. I mean, you have some contractor issues along the way, but then when you're done and you're exiting the property, you're done. And then when you own a community, it's different. I mean, you have 50 units, you have 50 different personalities you're dealing with. And even though it's passive, it's really not passive. Like you have to have those touch points. So what was the slap you in the face moment that woke you up and said, wow, this is really different, and I really got to dig in here?
Oh, the biggest slap in the face was I thought, if I can buy this with hard money, I'm going to refi this thing in 90 days. With a regional bank or a national bank. That was not the case. I got laughed at by lenders, and they were like, when did you buy this? Oh, I just bought this 3 months ago. Okay, yeah, talk to us in a couple of years. And I'm like, okay, that was a culture shock, because I was so used to single family where I could buy a deal and then refi within 60 to 90 days after that with a DSCR lender. It was just like clockwork. So I'm like, I bought such a good deal. There's so much equity in there. I'm going to be able to refi this thing instantly. That was not the case. So I had to hold on to it basically for 9 months with hard money. And now we're finally almost at the year. It's really been about like 10 months, but we're almost at a year of seasoning. That was the word. That's the word for 2024 was seasoning. Got to be seasoned. Because this was my first park, right? They probably would have been more apt to refi me after 6 months or 8 months if I had done 10 full cycle parks before. But this was my first one.
Correct.
So they really wanted me to be at a minimum a year ownership, just for committee approval, just for the bank and committee to feel comfortable with me. And we're finally at that point. We got loan committee approval. I'm going through a cash out refinance right now, and got loan committee approval last week, and we're set to close in the next couple of weeks with long-term debt on the park.
Well, congrats on that. And again, you hit on something so key there, because it's not just about the asset, it's about the operator, because they will look in that space. And the seasoning wasn't just for the property. It was to ensure that your business plan was going to be right. And when they go back to you and they say, well, did Garrett execute on what he said he was going to do?
Yeah.
But once you get that relationship with that community bank, the next time I will bet it will be a lot easier and smoother and quicker, because we have some community banking relationships where we know if we go in there and acquire a park, we could talk to them beforehand and tell them, hey, look, we're going to purchase of cash? How quickly can we get set and ready to go? And it's just because of that relationship. So the longer you go, the better it gets. But that's a good point.
Oh, 100%. And another quick slap in the face was, I thought I had such a good track record with single family. I was like boasting to these lenders, oh, I've done all these, I've done 200 transactions in the last 5 years and, 40 fix and flips and rentals and all this stuff. That's my track record. And they're like, yeah, we don't care. What's your multifamily track record? What's your mobile home park track record? I'm like, well, this is my first one. And they're like, yeah, we'll see you in a year. Yeah. And so that was a big eye opener to me, because I thought I was so cool because I had done all these deals in single family. But these lenders, they really don't care if you have no experience or 10 years of experience in single family. It's like two different worlds.
Correct.
So that was a big culture shock, but we're past that hurdle. Hopefully, lenders don't look at that as a bad thing anymore. And now I have a couple under my belt, and we'll keep growing.
Good for you. Good for you. And interestingly enough, I mean, you happen to be in Phoenix, which is for manufactured housing. I mean, they have some really great communities in that area. That's one of those markets that you typically see trading towards the higher price point, yet you don't buy locally. I mean, you're finding opportunity in the Southeast, much like us. I mean, we're in the Southeast as well. Like, how are you dealing with that pivot? Because I'm sure you were used to buying and flipping in your local market, and now you're, hundreds of miles away from your assets. Like, how was that for you? Was that a big hurdle for you to jump over to do that? And why the Southeast? Like, why not in Arizona in your backyard?
Yeah, it was a little scary at first, but I was just so used to Washington and the restrictive laws when it comes to rentals and just real estate in general. I dealt with that firsthand. So I had a really bad taste in my mouth, and I didn't want to further put my money into states with laws like that, just to protect myself and my family. Because it is a really big threat. Because I've lived it firsthand and had clients that have dealt with, 16-month evictions where, just that's a whole other story. But we love Phoenix. The weather's amazing. We love to live here. I will say it's extremely expensive here, and has gotten extremely expensive over the last 4 or 5 years. So for us, to really put money into Phoenix when it comes to mobile home parks, it doesn't make sense on a cash on cash return for what I'm looking for and what my investors are looking for. And I think just based on the rents and the cost per unit and the price per pad, or however you want to call it, in the Southeast, just that yield is just so much higher. And there's hurdles. Obviously, we're 4 or 5 states away. You have to have a tight leash on the management and have really good systems. But that is an easier hurdle to jump over than the price per unit in Phoenix or the price per unit in Seattle. And so that's just a hurdle I'm willing to jump over. And that's why we eventually started buying in the Southeast.
Sure. So, and you alluded to it, like what is your buy box? Like what is it that you look at for an opportunity? Are you renting the homes? Are you selling the homes? Do you discount park owned homes? I mean, is there anything that you don't touch, or is it, what makes a deal for Garrett, Terrell?
Yeah. I great question. I want to have some type of scale at the park, right? So I can't look at the 2 units, the 3 units, the 5, just for me personally. I know some people out there buy those deals, they buy the land, they infill 5 or 10 of them and turn it into a good little deal. Just for me, where I'm at right now in life, I just can't do that. I have to be at minimum 10 to 12 units for a smaller park. I will look at park owned or tenant owned. It does not matter. Really what I'm looking for is I am looking for mainly 2 things when I'm evaluating a park is can I line up the debt service and capital stack in order to cash flow from day one, not only to my investors, but to me, right? That's what I'm looking for day one. And two, is there a good enough value add in the deal, or is there a good enough opportunity in the deal in order for me to exit cleanly with returning all the investor capital, or refinancing or selling or 1031 or whatever it is? So those are the main two things. Can I cash flow from day one with the capital stack and debt service? And how can I exit?
Sure. And what type of value add are you looking to do when you buy? Like, what are you willing to do when you buy a community? Are you doing roads? Are you beautification? Are you doing infill? Like, what is it that you're willing to do? What is it that you're not looking to do right now?
So I haven't done infill yet, and mainly I think the less cost invasive value add that we have done personally, and just what we're probably in the near future going to do, is just mainly the park owned home to tenant owned home conversion and RTO, that structure. That's, in my opinion, that is the big meat on the bone from the start. And then the upgrading the community and the skirting and the painting and the playground and stuff like that. That's stuff that we can do after we have taken the big chunk of meat on the bone. So we want to do that first, and then we'll look into those other upgrades as time goes on. But just from a lending perspective as well, that park owned home to RTO to tenant owned, that's a huge financial value add. So we want to capture that as soon as humanly possible when we're buying a park.
Got it. So are you targeting? I mean, you started with the first one probably about 9 months ago, almost a year now.
Yep.
Have you acquired other communities since then?
Well, this could be a long story. I'm going to try to make it as short as possible, but we are now, as of right now, we are under contract on a 13 unit in Birmingham.
Okay.
That we are closing on seller finance next month. And then we are also closing on a 29 unit portfolio in Kentucky, just south of Lexington.
Okay.
We are closing in the middle of October on that.
Okay.
So those are in the queue. Those are ready to be closed within the next month. So that'll put us up to about, I believe, 81 pads in total, which is exciting, within the first year. But we were under contract for 52 lots in East Birmingham, about an hour east of Birmingham. We were supposed to close a month ago, or actually 2 months ago. We were under contract in escrow for 4 months. We had loan committee approval, everything like that. And we got to the day of closing, and the sellers said, forget it. We don't want to sell anymore. And
really?
So that was July 10th. So we would have closed on that. But unfortunately,
so what did you do at that point? I mean, did you look at specific performance for the seller? Did you know why the seller decided?
We're suing them. Yeah, we're suing them right now. It's not something that we wanted to do either. We were trying every which way possible to reach out. I mean, calls, text, email. Title company was even reaching out to them. It's just been, it was just complete chaos. For some odd reason, these guys did not want to sell anymore for some reason. A couple younger operators, not super young, but in their mid to late 30s, two guys. I'll probably refrain from saying their name right now, but
let's call them out.
Yeah, just
let's call them out. Let's get them on. I'll call them right now. Let's see what happened. Let's see if we can resolve this.
Okay, so it's Victor Turner and Austin Leslie with APA Properties in Oxford and Anniston. I'll call them out because they're getting sued right now. But it was complete. For the last month in the transaction, they ghosted their own listing agents. They had a fee agreement with them. It was complete pandemonium, and they're actually dealers in Birmingham as well, mobile home dealers. Mm-hmm. And I mean, we were ready to send the wire, and they just goes to the title company and then told their own listing agents, "Hey, we decided we're not going to sell." And we're like, "Man,
quite frankly,
yeah,
if nothing else, they're going to owe a fee, right? Because you sign a
yeah,
contract, that's an obligation. They're going to owe a fee to the listing agent.
yep,
They should, at a bare minimum, and things happen. Like I've had sellers change because of internal things happen where they couldn't sell at that moment. But then, hey, I have actual cost, due
yeah,
diligence costs, travel costs. I've paid surveyors, I've paid an attorney. Like, why should I bear that cost if you're not going to be a good operator? If I went to diligence and I went through and I'm hard on that contract and I don't execute, you're going to keep my down payment, right?
yeah,
And rightly so. You're going to keep my earnest money. Why should I be out because you decided to either better deal me or
yeah,
something else, right? And that's
yeah.
unfortunate.
Super unfortunate. And we have, and with the due diligence, we have almost $60,000 of due diligence into that deal, and I raised $350,000 of private capital already for the deal, and we were ready to go. Like loan committee approval, I mean everything. The lender was going to send their bank wire, everything. And these guys, the main thing is they're just bad eggs. When it really comes down to it, they're just bad eggs. And we unfortunately got into bed with them. And I didn't know that at first, but apparently I've heard from other brokers and other operators that this is kind of what these guys are known for. And so it's unfortunate. We've been very lenient. I've been extremely nice and kind to them through this whole process when I could have been really mean and nasty. But we're just trying to, and we're talking with their attorney right now, and we're most likely going to settle because he's seen the breaches and everything like that. And so that's kind of the point that we're at right now. But we're just trying to get that page closed and that book, that book closed, and we're just trying to move the page and move on to the next deal.
Wow.
But yeah, extremely frustrating. A complete curveball, not what we were looking for. But now we have, 2 really good deals that we're going to close on next month. And, we put a memorandum on that property, a recorded memorandum on the 52 lots. So if ever anything in the future, we'll close on it. But for right now, we're looking for a settlement.
So listen, I wish you well on that, because having gone, you're in this space long enough, you're going to have things happen. The most important thing you could do is, you want to be known as somebody who's going to execute one way or the other. Look, I've been in diligence. I've walked away from deals when things popped up that weren't as they were supposed to be, or we couldn't come to terms on things that were important.
Yeah.
But once you've gone hard, you've got to either execute or you've got to make the other side right if you can't execute. And if they couldn't do that, and I'm sure there's 2 sides to a story, but it's pretty cut and dry when you have a contract and you're getting ready to close. Now, you mentioned this before, and I think this is an important point because it's a scaling question, right? And I had somebody very early on tell me there's a certain skill set you need to get to 100, and then a certain skill set you need to get to 300, and a different skill set to get to 800. Like there's different things that you need along the way. What kind of systems do you have in place, or did you put in place? Because now you're going, it's not just that you're adding, you got a 29 unit, a 13 unit, you're actually going up 300% in size, right? It sounds like in a short period of time. So what kind of systems have you worked on to put in place prior to be ready for that type of growth? Because that is very solid growth. Like what kind of systems do you have in place to handle maybe the influx of additional work on you and your partner?
Yep. So my business partner, Ethan, I brought him on a couple months ago to kind of help with the operations side of things. So that's his bread and butter. That's like super easy for him. For me, it's talking with sellers and underwriting deals and raising money. That's like my comfortability. But his is systems and operations. So we have an assistant right now an executive admin who's an expert on Rent Manager. And so we're going to get those 2 communities implemented with Rent Manager. We're going to have on-site guys and gals that are eyes and ears on both deals in Kentucky and in Alabama. But we're gonna be working as a collective to put everybody on Rent Manager, have on-site personnel there, and then have really good proper expectations with them of what we're expecting and the reporting and the communication and stuff like that. And so it's going to be a pretty tight ship. But yeah, we are going to be implementing Rent Manager for all of those units.
Got it. Well,
yep.
Listen, it sounds like you're, on a pathway where I think people in the space are going to hear a lot more about Garrett Terrell over the next few years, and a lot more about what you are and what you're doing.
Thank you.
Off topic, right? Not to, you mentioned, you're reading a book right now. What do you read? Like, what's a couple of books that you're reading now, or something that you think that the audience should, pay attention to this because this has really helped you?
Yeah. I just read, I'm currently reading The Go-Giver. Fantastic book. Really, really love that book. I'm about halfway through right now. I'm also doing 75 Hard. So I'm reading a lot of books right now.
Okay.
But I just read Never Split the Difference by Chris Voss.
Great book.
Love that book, man. I was like, every page I was like, it was a great book. Highly recommend it. I would say those are probably the two favorite books of the year so far. I have some other ones, Dave Ramsey, Total Money Makeover is a solid one to just kind of refresh the memory and get away from, stupid personal debt that doesn't make you any cash flow, which is different than real estate debt.
Sure.
But yeah, it's a good, kind of refresher. And also Outwitting the Devil by Napoleon Hill is also a fantastic book if you haven't read that. And yeah, that's pretty much what I'm reading right now.
Perfect. Garrett, if anybody wants to reach out to you, find out more about what you're doing in the space, where can they find out? Where can they reach out to you?
Yeah, absolutely. So anybody out there that's interested in the MHP space, whether if you're a buyer and you want to buy some parks from us, or you're an investor and you want to be an LP on some of our deals, you can go to rocketcapital.fund and you can click sign in or log in. And what that will do is add you to our email list. And if you're a buyer, just reach out to info@rocketcapital.fund. We'll add you to our buyers list. And yeah, I'm on Instagram, Facebook, TikTok. I'm all over the place on social media, so you'll find me somewhere. Just reach out, answer all my DMs, and yeah, I'll be happy to help.
Garrett, this has been extremely fun and I think really enlightening. I wish you continued success, and I'm sure I'm going to see you around, on some of these deals that we're working on. We're in the same markets, so I'd love keeping that line of communication open, especially with other community owners. If you've liked this program, guys, and you're listening, share it, like it on Spotify, iTunes. We appreciate that. If you want to see what it's really like to be down on the ground and turn a community around, check out our YouTube channel at Trailer Park Turnaround, where we show you an in-depth, video series of us on the ground, Eric and myself, turning around some of these communities. And of course, if you want more information, check out the mhpexchange.com. Until next time, this is Frank Rizzo at the MHP Exchange Podcast. I want to thank Garrett for being part of this program. I thought this was super enlightening, and I look forward to hearing more from you, the listener, going forward. So if you have any questions or comments, send us some feedback at the mhpexchange.com. Until next time, happy investing.